Well, guys, the S&P is actually now up for the year, I believe, after this debacle with tariffs. Now, everyone was scared about tariffs. Everyone was talking about tariffs. Tariffs were the big news. Mo is laughing right now about this because why, Mo?
My thing was, everyone was like, oh my God, we're losing our retirement, this and that. And it's like, oh,
Didn't you have a friend like exit completely?
100%, gone. Sold all of his stocks.
And, you know, we talked about that on the channel a couple of times, saying like, that's too quick of a sell for me to feel like, okay, like I was really hoping this is the start of another. But every time the market falls fast, I'm like, ooh, is this a start? Is this a start? It ends up not being.
Yeah.
And news goes fast, as you were just saying before we started recording this. Guys, 2 months ago, it was Trump's running the U.S., Trump's running the world, all these tariffs are terrible. And guess what? I'm not a big fan of this tariff war. I think it's absolutely asinine. I think it's stupid. But at the end of the day, it's a short-term problem. Just like everything we go through, except for one major factor, is a short-term problem.
Yeah. So speaking of the speed of news, what I was going to say, I was looking at Yahoo Finance last night, 8 o'clock. It's 10 o'clock in the morning right now.
Yeah.
Everything was about the 50% tariff on steel coming into the United States, right? I'm on Yahoo Finance right now. There's not one story about it.
Guys, one of the benefits of how quick access to information we have nowadays is we get access to amazing information now. You know, I have arguments with people all the time, and it's funny because the people I see attached to their phones, they're ones who are saying, phones are ruining us. I'm like, no, I don't think so. Like, yeah, I get it. We have less human interaction face-to-face, but we're also talking more. You know, me and all my buddies, we talk all the time about things because we have that access. You can also become a lot more emotional about investing because of this access. That's the problem. This is one of our favorite charts that we made, going back to like 1950. Guys, this is a blip of all the major things that have happened since 1950 in the stock market. A blip, an absolute blip on this. And look where our stocks have gone. Guys, we talked about 18% mortgage rates. We had stagflation. We had presidential assassinations. We have worst terrorist attack ever. Speaking of worst terrorist attack, that Netflix series on bin Laden.
Yeah, you said it's good.
Phenomenal. It's basically like the documentary version, in my opinion, of Zero Dark 30.
That was a phenomenal movie.
Which was a phenomenal movie.
Okay.
Do you know who produced that movie?
No.
Larry Ellison's daughter.
Really?
Or is it son? One of the two.
Interesting.
I think it was his daughter. Produced that movie.
It was very good.
Very good. So I recommend everybody watch that. But anyways, these are all the things that have happened. But you know what the funny part is? When you look at long-term like this, long-term like this, long-term like, what drives it? One thing. Valuation. It is amazing to me. Everybody in this world cares about all these stories, but the biggest elephant in the room, people ignore. And in fact, I'm going to go over two of the most reliable metrics, and people are going to say, Paul, that metric doesn't matter anymore because companies make money internationally instead of locally. I'm like, God damn it, shut up. Shut up about that. Valuation is valuation, guys. Absolutely. And all it says is the next 5 or 10 years are probably not going to be as good as the last 5 or 10. Could it be different? Absolutely. If we have a world in which, ironically, I think inflation would actually help these metrics quite considerably.
Probably.
If we had massive inflation for the next 3 or 4 years and that drove GDP up so much so fast, this would be justifiable. So the ironic part is the thing that everybody's so concerned about is the thing that actually might save valuations.
Yeah. So
where do we stand on valuations right now? Well,
let's see.
Let's go to my favorite one, the Buffett Indicator, the stock market to GDP ratio. And we're now at 109% overvalued.
Not bad.
Yeah. Not 109% of value, 109% overvalued. What does that mean? Well, guys, up here, this goes back to 342 quarters of information going back to 1928. When we were 50% or more overvalued, there are 27 instances of that. The average is a negative 0.9% return for the next 10 years, not including dividends.
Yikes.
That's at 50%. Guys, we're at 109%. And you know what's interesting? Let's go to this. Undervalued, 10-year average is 6.8%. Better than 30% undervalued, 10.8%. And as you get more overvalued, what happens to returns? They get worse and worse and worse.
So what do you want? What do you want to buy?
It is not a coincidence.
No.
Now, does that mean you can't make money in this market? No, of course. You can still buy great companies at great prices. But even for those companies, you've got to understand why you're buying them. And then if they fall further in price, you got to be comfortable buying more. If you can't do that, investing is not your game. Dollar cost average and low cost ETFs. If it sounds exciting to you, but you're still honest with yourself saying, I don't know if I can stomach that, buy low cost ETFs watch our channel, learn a process, you'll get better over time. That's what I did. I started by buying individual stocks, then got burnt, then started buying ETFs, and slowly over time decreased the number of ETFs I had and bought stocks. And guess what? Over a long period of time, up until COVID, I had a above market average return. But the big reason for that was I didn't touch my ETFs and I didn't touch my stocks that I bought. That was the big reason. Since COVID, I have sucked. But it's a new era. It's only 5 years of my time. I'll be okay with that. My process works in the long run.
Yeah, and if you're going to buy individual stocks, you have to be able to, let's take April, for example. You have to be able to sit on your hands or go buy.
Yeah.
Like, you can't freak out and sell. You just can't.
I mean,
it sucks seeing money go down.
Yeah, it does. And there are reasons to sell stock.
Definitely.
But usually those aren't the reasons why people sell stocks. They usually sell stocks because the stock price goes like this.
They're scared.
But you have to sell a stock because you paid this and the fundamentals don't justify it and the fundamentals are getting worse.
Yeah.
There'll be a time when the market is going down, stocks are going down, but fundamentals are getting better. Those are the best times to buy. That's what makes it hard. Okay, so let's go to the 10-year cyclically adjusted PE ratio. It doesn't care about where the money is earned. It's just, what are the earnings of the S&P? Bring it to today. We're actually worse. We're 110% overvalued. Guys, what's the bottom line? We're overvalued. And that's just it. And all the other news about the Fed and all that stuff, it's just extra noise. Do we care about it? It's good for talking points.
Yeah.
But I don't care about it in the long run.
The grand scheme of things?
No.
No.
Is there any big news this week? Are there any earnings going on?
There's a couple of earnings here. We have NEO. I didn't even know NEO is still in business. NEO is reporting.
NEO's doing well, aren't they?
I didn't know that. NEO's reporting tomorrow. Dollar General tomorrow. CrowdStrike tomorrow. Five Below on Wednesday. Oh, actually, Lululemon, DocuSign. Broadcom. Interesting. Okay, so those are reporting Thursday. So we have more earnings than I thought this week.
So look at this about NEO. Here's NEO's chart. This is NEO's chart. By the way, I don't even know the date. I don't know why I don't see the date here, but I'm guessing this is February of 2021.
Yeah.
This is when electric vehicles were hyped.
100%.
The all-time high, it was January of 2021, was $67. It is now at $3. Let me show you guys something interesting. Most said, I'm surprised I didn't even know NEO was still around. Well, look at this. Here's the revenue by year. 700 million, a billion, 2.26, 5 billion, 6.84, 7.7, 9.13. It's gotten better. Let's see where the losses are, though. Oh, boy. Oh, boy. Have they ever made money? They have not. This is tough. All losses across the board. Guys, that's exactly it. It's just tough. These businesses, this is what we tell people. We were telling people, please go watch our videos from the past about electric vehicles. God, it was so awesome. We were like, why are people banking on electric vehicles with a hype? That was the AI of 4 or 5 years ago.
Yeah, it didn't last long in the grand scheme of things.
No, it didn't.
And everybody had a company.
Everybody had a company.
Canoe. Remember Canoe?
No, I don't remember
That was my
Canoe.
favorite one. I don't even know what the hell it is.
How about Nikola? And they were literally pushing a semi-truck down the road. Now the guy's in jail for fraud.
Workhorse.
Oh, Workhorse was the best.
Workhorse was fantastic.
Because Stock Mo, not Trader Mo, Stock Mo.
Even Rivian. I don't know if Rivian would still be around if it was not for Amazon.
Oh, that's a good point.
Yeah.
But Rivian's a pretty cool car, though.
They're
Even
cool.
Lisa
Even
sees
their delivery
Rivian's.
trucks.
She's like, oh, it's a nice car.
Their trucks, their SUVs, they're cool.
Yeah, they
But
are
without
cool.
Amazon, would they be there? I don't know.
I don't know. It's a good question. Something to look into.
Yeah.
Anyhow, guys, a lot of noise, but we love talking about the noise. It's fun to talk about these things because they do entertain us, but we want to teach the process of keep it separate. Now, guys, we have a very specific way of thinking. It's called a principle-driven investing approach. I talk about it all the time. There's 5 tenets to it. I use these tenets as my way of thinking about all investments. I own real estate, I own businesses, I own stocks. I think about all of them using these 5 tenets. So if you want to get our free PDF where it explains it to you thoroughly, click the link below. We're going to email it to you immediately. It'll give you those 5 tenets. I strongly encourage you, keep those near you. Go through them every single day. I still do this every single day. I still think about things in this way. Check it out. Thank you very much for your time.